For the second month in a row, the U.S. Federal Reserve has hiked its benchmark interest rate by 0.75 of a percentage point to between 2.25% and 2.5%. The move is aimed at taming levels of inflation not seen in the U.S. in around 40 years. The impact of the decision is rippling around the world as smaller economies, including South Korea, will seemingly be left with little choice but to follow the Fed's lead. Eum Ji-young with the details.
The U.S. Federal Reserve raised its benchmark overnight interest rates by 0.75 of a percentage point for a second straight meeting. At the end of its two-day policy meeting on Wednesday, the Federal Open Market Committee announced its largest back-to-back rate increase. The adjustment brings the cumulative June to July raise to 150 basis points, which is the most aggressive tightening since 1981. The short-term borrowing rates now stand between 2.25% and 2.5%, similar to levels in 2019. The decision, despite risking a sharp hit to the economy, was unanimously agreed upon by voting members of the FOMC to crush inflation, which is running at rates unseen in 4 decades, reaching 9.1% in June.
Our overarching focus is using our tools to bring demand into better balance with supply in order to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored.
Powell said that this process is likely to involve a period of below-trend economic growth and some softening in labor market conditions, but added he does not think the U.S. economy is currently in a recession.
There are just too many areas of the economy that are performing, too well. And of course, I would point to the labor market in particular. As I mentioned, it's true that growth is slowing. And for reasons that we understand, really the growth was extraordinarily high last year, 5.5%. We would have expected growth to slow.
He also signaled a possible third hike, saying the Fed anticipates that ongoing increases in the target range will be appropriate. But one expert says it's unlikely that interest rate increases will be as big as the last 2 rate hikes.
I think it's more likely that we're going to see some better numbers for headline inflation because energy prices in the U.S. have come down a bit and some food prices have come down. Probably what will happen in September will most likely be 50 basis points.
The Fed's aggressive monetary tightening also has global repercussions. The U.S. interest rates have surpassed those of South Korea for the first time in 2.5 years, which could lead to capital outflows from South Korea. But Seoul's finance minister says the effect of the Fed's rate hike on local financial markets is likely to be limited.
In the past, there were 3 times that the Fed's benchmark interest rates have gone above South Korea's, but during those rate increases by the Fed, foreign stock investments maintained net inflows.
Chu added that the government will closely monitor the situation and expend preemptive measures against any risks. Eum Ji-young, Arirang News.